set. All engines go. Welcome to the angle. Let's start the show. Hold on tight. The stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have an exhilarating lineup of segments for you all to give you all as much information as quickly as possible. As per usual, we'll do a little bit of live trading, some market analysis here between market open and maybe until like 9:45, 10 o'clock. And today I have a segment I love to do with you guys. It's called The Bull and the Bear. And today, what makes it especially special is the fact that we're focusing on the indexes. Two indexes in particular, obviously the S&P 500 and IWM, or the Russell. So you want to keep an eye on that. That segment will be around 9:45, 10 o'clock. What we're going to do with the bull and the bear and what that segment actually is we look at a bull case and a bear case for both, in this case, both indexes, and what to look for if you are a bull or a bear. So anytime we highlight the bull and the bear segment, it's kind of showing that there is a bull case and a bear case to be made, but what to look for to react or not react when you see certain signs. So that's what we got coming up for you today on the show. Now it is just about 9:20 right now. We're a little bit into, or we're just shy of market open here. Right now the market's hovering around that key obvious psychological level of 600, just a little bit above it right now, trading at 650 cents. Going to pop over to our catalyst watch for the day, see if there's anything coming through the pipe today. We do have Trump speaking at 2:40 today, observing a military demonstration, so I guess he's not necessarily speaking, but at least be aware of that. He will speak at Fort Bragg, though, at market close, so probably won't affect intraday trading at least. But obviously want to keep an eye on that. Only other thing to be mindful of is the 3-year note is at 1 o'clock. That might cause a little bit of volatility. Obviously, the longer term notes or the longer term bonds will have a stronger impact on the financial outlook of the market in general. So 3-year could have a little bit of a bump in the road there. So something you want to keep an eye on. Now, back to the market. We'll look around things real quick. We'll do a quick little market preview for the day, see where we're sitting, and kind of go from there. Now, as I've been telling you guys, if you've been watching the program, and if you're not, or if you haven't been, welcome. We've been specifically watching SPY, its relationship with IWM, which we're going to go over a little bit later today, and more specifically, volatility. Now, we've been talking, and I've been but prefacing, or at least highlighting, the importance of watching the VIX lately. And the VIX is now at 1723. Now, if you remember a few days ago, if you've been watching the program, we were sitting north of 1920-ish area, and I said, once you see the VIX come down underneath that 18 level, that 19 level, things should stabilize a bit more. And it's very interesting to see right now. We see the VIX at 1723. Meanwhile, the SPY is sitting near all-time highs, and we're moving up on lightish volume. Volume's been steady on the daily chart, but intraday it seems to dip and wave, which is something we'll talk about a little bit later when we get into the bull and the bear. But overall, pretty good sign if you're looking as a bull at the market. This volatility move, and I'm sure a lot of people, if you've been on social media, you saw one account post it, everyone posted it. Biggest volatility downside move within a month or something like that in history, which I guess makes a lot of sense. Or in 90 days, whatever it was, we were up at 60 just pre-tariffs, and now we're all the way down here at 17, which is a sizable volatility crush in that time frame. Now, I do want to remind you guys what the VIX means and how this will shape our thought process heading forward into the next few weeks here in the market. Remember, VIX gets its value from the difference in the SPX spread of out the money and in the money contracts. So that spread, as it widens, there's a bigger price disagreement on where SPX is. As that spread tightens, meaning volatility comes down, there's more of an agreement, the spread is smaller, on where SPX should be. So consequently, as you see the VIX come down, remember, it's not necessarily a one-to-one relationship with the market. It's more or less a sign of price agreement or price disagreement. And as you're seeing the VIX come down more and more, we're understanding that the market is more in agreement of what price should be, or at least where price is going. And that's backed up also by seeing the market kind of just grind to the upside very steadily. It's very reminiscent of when we go back in time here, basically from like this late 2024 time into the end of the year, where we just kind of floated up. We had a little bit of a day or two of having a big move up, big move down, but overall just kind of like steadily pushed up on the chart here. And that's kind of what we're starting to see once again with the last 2 weeks here. If you want to loop in the last 3 weeks or so to get that little where we're kind of evening out, you could do that as well. So that's something we'll talk about a little bit later. Looking at the Qs, we're not too far off from all-time highs on the Qs. That all-time high number, $540.01, currently at 531.55. So just about 1 or 2% shy of hitting that new all-time high on the Qs. So obviously your tech investors, you want to keep an eye on that. Something to be mindful of, we did break the monthly red SAR here on the Qs. So if you've watched the program, we talked about the SAR on the monthly chart for SPY, which I don't believe has broken yet. It has not. But you did get that break on the Qs. So if you are a tech investor, that might be something to kind of wet your whistle, something to be you might want to be interested in watching tech. If it breaks that all-time high, watch volume specifically, you could get a nice rally on tech. IWM I want to talk about more in depth in a little bit when we get into that bull and the bear segment, so we'll come back to that. But you're sitting on a very interesting point on the chart. Watch your small caps, small, medium, large caps. I brought this up to the members of our community over exclusive trading. If you don't know what that is, where we give all of our ideas, myself, my cohorts, Grumps, and exclusive trading, obviously. And we give a lot of our ideas, trade alerts, etc. So education, if you want to check that out, links are in my bio. But I talked about this morning where IWM is at a very interesting spot, and we'll bring it up a little bit later, where we could have, and I did this last year, and we called it a hashtag small cap summer. We could have hashtag small cap summer once again, which would be very interesting to see. As you saw last year, kind of had a little bit of rallies there throughout the year. We might see that happen once again going into this summer. Yeah, pretty much. Looking at our Mag 6, as I like to call them. Nvidia's sitting pretty okay. We're still north of my like bull line, so that 140, 136 area is what you want to watch as a bull. Above that, you're still looking pretty good on Nvidia overall. Keep an eye on your weekly chart, but overall, it's looking good. You do want to get some follow through here sooner than later. The monthly is actually looking like it's ready to break a new all-time high if we can see volume and getting a sustained move and holding over that 141.36 area. You could see a continuation with Nvidia to a new all-time high, at least in my opinion. Apple. We should really talk about Apple a little bit. Yesterday, what a fart. I mean, is anyone surprised? And I'm overtly, just in general, a bear on Apple. I don't think they have great products. You could disagree. I don't really care. It's my opinion. I don't think their products are that great. I don't think their innovation's that great. I don't think they offer anything besides simplicity and laziness. And what I mean by that is they were first to market. They did a great job. And obviously the first few years of the iPhone, everything revolutionary, right? That was innovation. That's where this company took a stranglehold of the market, of that smartphone segment specifically. And even with the iPad, they were innovators there too, where it's just a big iPhone really, but they were innovators in that respect as well. And what we're starting to see now, and what we've seen now for Apple for the last 3-4 years is not much. They're not innovating anymore. Basically ever since Steve Jobs passed away, unfortunately, innovation's been minimal. And I think they're very comfortable. And you'll see a lot of companies, as they grow, you go to a growth segment, you hit maturity. And when you hit maturity, you make a lot of money, a lot of things happen, but eventually, if you know the business cycle, if you go to business school, once you hit maturity, you eventually hit decline. And I'm not bearish on Apple like long term by any means yet. They have plenty of money. They have plenty of ways they could turn it around, plenty of different markets they could go into. But until they do something, until they innovate more, Apple's just not exciting. They're not doing it. They're comfortable. And I don't think the market wants Apple to be comfortable anymore. I mean, yesterday, essentially just releasing a fancy new OS, which isn't even a new OS. It's something that if you're an Android user, you can change your icons whenever you want or whatever. So this is something that Android users have had for years now, essentially. And Apple's just rolling it out and calling it brand new and flashy because everyone who has an Apple doesn't know this yet, I guess. I don't know, just what Apple is bringing to the table right now, I'm not impressed with. I don't think the market's impressed with, as their stock price will reflect that. However, they're sitting on a boatload of cash and they still make money. They still sell products. So, you can't be mad at them. But for your people who are looking 3, 5, 10 years down the line, unless you see Apple try to innovate or try to do something different sooner than later, really, I don't really think they're getting out of the pass here. And I remain neutral on Apple, I should say, not necessarily bearish. I'm bearish near term. Like I said, it's the bulls have to hold this 195.83. You saw them try to get a rebound up here and get over this like 205 area to no avail. The 50 MA really pushing them down here. Now you're sitting on this POC just north of 200. If the bears break this, you break 195. Like I said, this is going to come to low 180, high 170s. I am very certain if we break this 195.83. I'm so certain I'll put my money where my mouth is and I'll make it publicly known. But I'm not going to put the horse before the cart. This 195.83, as long as it holds, it still is, like I said, neutral short term on Apple specifically. Just want to take a little bit more time going over Apple because of they had their event yesterday, the WWDC, if you missed it. Plenty of notes online, but you're not really missing much. One more minute till the market opens. Quick little summary. Microsoft, I did not open my short on Microsoft at the all-time highs yet. I did not get my confirmation, so I did not open that short. Microsoft made a new all-time high and continues to push up pretty nicely so far, so you don't want to step in front of a steamroller trying to pick up a penny, so I'm waiting on that. Google had an excellent move the last 2 days, really solid bounce back. Look for it to get over the high on the 522 candle. It's something we'll watch live today as well, actually. You're right there, essentially. So getting over this actually sparks a really nice potential rally here for Google. Full transparency, I'm still long 162.64 shares as well as some 170 calls. And Amazon, I haven't been bearish on Amazon. I said as long as it's over 211 cents, you're good to go on Amazon. And the market agrees. We are now at 216.75 on Amazon. Tesla, wow. Recap on that because I haven't been here for a few days, but I said sub 360, this thing is going down, and it did. It had plenty of gaps to fill. It went down. Now you're getting a little bit of pop up. No man's land for me right here unless you're an intraday trader, so this is not something I want to touch. But I wouldn't mess around in this range north of 291, south of 331. Unless you're intraday trading, you'll have a lot of volatility there. So that's great if you're looking to day trade. But if you're an investor, I would wait either which way, unless you get a move sub 291.85 or above 331.89. So different viewpoints depending on how you look at the market, if you're a trader, if you're an investor. Okay, now that we've reviewed all of that, let's go back into the market. The market is now open. We missed the opening bell, but that's okay. We're currently sitting right around where we were at pre-market, that 650 level. So not much to really see here. We're going to watch this just for a minute or two here. And as I alluded to in the beginning of the show, I mentioned how we saw the volume, or at least I said how volume on the SPY was questionable, mainly at the open the last few days. It's dipped down pretty low. And then you see it spike back up, obviously, at the end of the day. But volume at the open in the beginning of the day is a bit lower than it normally is. And my rule for day trading specifically, I like to look for 100K volume per minute or 500K per 5-minute candle. And we do see that, obviously, that dips midday, you know, people go to lunch, etc. But at the open, we're seeing lower volume than normal. As we're sitting at this like key resistancy level, this obviously the 600, and I have another LOI right above here at 691. I'm sorry, 601.92. So we are sitting in a range where it could be treated as supply, for those who use supply and demand, where you're seeing bulls be a little nervous and you're seeing bears starting to maybe take their picks. The words I like to use in this environment is I'm cautiously bullish. I don't want to be a bear here. The risk to reward could favor the bears, but other things reflect that being bullish is more prudent, unless there is a bear confirmation. So I would say I'm a cautious bull. When I say that, in general, I tend to lean more like 70, 75 bullish to 30 to 25 bearish, where I'm going to look for more bull opportunities than bear opportunities. But with the right setup, a bear opportunity could make more sense. And that's kind of where we're sitting here on SPY. Volatility still down. You're seeing IWM. Look at IWM right now, actually. 214.53. I talked about this level yesterday in our Discord over exclusive trading. This 213.97 level is massive for IWM. If you don't have this level on your chart, put it on your chart. This is a key level. We go back on the daily, and we'll review this later. Going all the way back here. Where is it? Rewind. That is around this low, this general, hold on, let me go here. This 113.25 low, or that close, open. Also where that 200 tap there, and a little area of consolidation there, and I believe we interacted again back here on 10.10.24. It's an important level. The low of this candle here at 9.16.24. The close of this candle here on 8.1.24. Very important level on IWM. Make sure you have that level on your chart if you are someone who is especially a day trader, or even as a swing trader. You're going to want to watch this 213.97 level. Very important. If you're a bull today specifically, you want to see that. There could be a bull opportunity for a day trade here if we come down and test that, or even if you take an early stab on that 200 MA tap just prior to it. With the extended hours off, you obviously have a gap here to fill, right? But I want you to notice here how we're seeing the IWM up a little bit more in comparison to the Qs and generally SPY, but you're going to have obviously the Russell rolled in with the SPY. Now we're going to go to our sectors, but before we go over to our sectors, guys, I asked you twice a stream. I'm going to ask you once right now. Do me a quick favor, wherever you're watching, drop a like, drop a subscription, drop a follow, whether on YouTube, X, or Instagram. All of that really helps me in the algorithm. It just takes 2 seconds for you to, if you're watching right now, click the button. If it's in your phone or your pocket at work, go into the corner real quick or go to the bathroom, tap the button whenever you get the chance. I greatly appreciate it. Again, I'm a very small fish in a very large pond of content creators that bring you finance information. And if you appreciate what I'm doing, you find it helpful, you want to see more of it, please, by doing that, it helps me greatly. That's the only thing I ask. Again, these are totally free. It's the one thing I ask of you. Just drop a like, a comment, whatever, interact however you can. It helps me greatly, and thank you in advance. Now, let's pop over to our sectors here and see what's going on. I want to check that out in a sec, or go through that a little bit more in depth, but I am watching IWM here because I am curious to see if we're going to get that 213.97 tap here right into the open. where I might actually want to open a long. So we might want to wait here a minute. And I'm not going to do a 0 day if we get a tap. I will do a 1 DTE. We'll check the chain. We're at 214. What do we got? So your 215s of a Delta 41, which is pretty solid. Delta 32. I might want to play it safe with a 215. Keep an eye on the 215 contracts. I'm saying this in advance because obviously there's a delay on the stream. So I'm going to keep an eye on the 215 contracts for this 213.97 tap. I might get in a little early, but sometimes, especially with IWM, it might tap, come down, and aggressively try to fill this gap and whiplash back up. So this might be one where I'd be a little bit more patient, but I wouldn't grab a 0 on this just because of how the other indexes are sitting. So we're going to keep an eye on that. But I am very curious at these 215s for tomorrow, which I might start nibbling on here in a second. Get that up. All right, I grabbed a few there. Nothing crazy, pretty light. I'm gonna wait and see if we can get a little higher here, and I might add a little more. All right, added some at 114, added some at 118. All right, that'll be good. I'm gonna set on a late position on this. And kind of wait and see. If we fill that gap, then I might consider doing a little bit more. But we'll keep an eye on these 215s. I have a 116 average on the 215 calls. Keep an eye on things here. Like I said, there is a chance if this LOI breaks that we push and fill the gap, obviously, but I'm more interested on seeing this LOI hold. We basically wicked down and tapped it. We're sitting on the 8 EMA here. It is a little bit of a ballsy bet here, but the risk reward here is pretty solid with a 50 delta, right? Was it 46, 50 delta, 41 delta? Assuming back to an all-time high, that would give me assuming no delta appreciation, roughly 20-25 cent gain on these contracts, which would mean they would sell for approximately, what's that, 116 plus 25, 141, which means I'd have a gain of approximately 22%. So we tap highs of the day. Minimum, these contracts should be around $1.41. So I should be sitting at about a 22% gain there. So pretty good risk to reward, at least from what I'm looking for here, because I do anticipate actually that high to break and these actually to possibly go in the money. So I will keep an eye on that. We'll take a quick flip at the sectors here momentarily. And again, that's for tomorrow. So I got time. I don't have to worry. We don't have to babysit it as much like we do with a 0 DTE. Which is the nice thing about buying time on your contracts. Now, we got XLU here up about 0.46%. Energy, big mover today, 1.2% roughly. So big move on energy, the XLE. So we'll take a deeper dive there momentarily. Consumer, what's the staples, right? Consumer staples up a little bit, 0.28. Tech not even up that much, 0.22. Getting actually a bit of a rally right now. A pretty decent candle here on XLK. Real estate, a little funky. Still green, but not looking promising. Materials moving down a little bit. Industrials not looking good out the gate. Healthcare, very similar to what we just saw with real estate. Not looking great. Looks like it could flip bearish there. Financials, interesting open. Consumer discretionary, this one probably will end up doing okay today, mainly due to how and where Tesla's sitting. You expect volatility though, obviously, and comm service is actually looking pretty good. So overall, things are pointing more bullish than bearish, kind of like how I've been sniffing it out here. Guess we will babysit for now these IWM 215 calls. And basically look for some consolidation of, as long as we're staying north of this 213.97, it's looking fine. If this does break, I would anticipate a wick and then a quick reversal unless we see a volume pop on the break to push it lower. Now, you'll also notice your MACD starting to curl down a little bit here. So what I would like to do, and more preferential really, is if we kind of chop here a little bit longer before pushing up to the upside. If you turn on your extended hours here, that 200 MA, like I alluded to before, is serving as a support here as well. So you have a few good things working for you here. In fact, I'm going to add a few more. Okay. Not too shabby. Still keeping that 116 average. I added a few at 114, 116, and 117, so we'll see how that works out. Getting a nice little reversal here. Look at your MACD start to flip. Watch this RSI get north of 57. If that RSI gets north of 57, you're going to establish some bull momentum. So we're going to want to see this 50 MA, this purple line on my chart, crack with that red SAR, high RSI, MACD flip, volume, everything's pointing to the upside here. If we see some follow through, more importantly. So getting over that 214.37 is what I'm going to look for. Breaking that, we're more than likely going to make a new high on the day on IWM. And remember, my price target, I'm looking for 141 on these contracts. They're currently at 119. Bid ask is 121, 123. So ideally, I would look for 141. Now we're getting a nice little push on these. There we go. All right, gonna take a trim here momentarily. All right, I'm going to trim some here for 11%. Nice candle here. Always sell into strength. If you're a day trader and you don't know that, learn it. Tapping the red SAR here, so keep an eye on that. So if you got in roughly with a 116 fill and you fill anywhere from 129, 130, 128, you're going to get about 11, 12% there. Not bad. For a 1 DTE. Now again, we want to watch that high a day tap, and again my premium target, so we're looking at the first thing on my top of my watch list here, that's our contract. My premium target for these is at least 141. So once we hit 141, that's going to be basically a completed trade. I'd look for that high a day break because I'm anticipating these actually going in the money, but that's where I'd want to realize a good chunk of my position here and not be too greedy on the day. Also, if we see a back test and a failure of roughly this level, this we'll call it 214.30. If we see that level fail on a back test, which we're tapping that area right around now, I'd also want to consider putting a stop loss on and just letting it, see if it works out and pushes higher, or even closing at that point. Now, this is how I'd also treat a 0 day, to be fair. I just want to take the 1 DTE to lower my risk exposure a little bit more. What you don't want to see here is a bearish engulfing candle, especially on higher volume. So right now, candle's not closed yet. We still have 17 seconds. So if we see a bearish engulfing candle, especially if there's higher volume, no bueno. If we see a bearish engulfing candle, or we see a bear candle come down and leave a wick, and we push back up, that's actually really good. So like I said, the main area I'm looking for a little bit of defense here, that 214.30 area. All right, it's looking like we may push back to the downside. So watch these contracts carefully. All right, I'm going to trim out a few more here just to reduce risk. Let's see. POC here. So this is a deeper, I didn't really want this, but if we can recover this in a minute or two, that's fine. It's not ruined, but this isn't ideal by any means. If I was in a 0 day, I would have closed on that last candle. If I'm on 1 day, I have a little bit more options here. Guys, make sure you're sticking around at the end, probably at the end of this trade. We're going to roll right into the bull and the bear segment, and we're going to talk specifically on SPX or SPY and the IWM, the Russell, and what to look for in the near term here. So if the market really is going to have a true another bull run potentially, or if this is the start of a potential bear run, bear rally, bear drop, whatever you want to call it, a bear move. So stay tuned to that. We'll get into that in just a little bit here. And we'll see what's happening there. Really kind of choppy here. I might just come back to this. I think what I'll do, guys, I'll put a stop loss here at break even. and I'll continue the show, and we'll just come back to it. I'll put a little alert up here. Create alert above. There, that way I'll get a notification that'll ping me. All right, so I'll put a stop loss on at break even. Let me alert that. So nothing fantastic, only about 11% there so far. Put a stop loss on, let's get on with the show. How's that sound? Alrighty, let me get back to my other watch list here. Cool. And if we get we'll interrupt the segment if I get a little notification. Alright, so let me get that. That's fine. Cool. Okay, so this is the bull and the bear. And right now what we're looking at for specifically this segment is going to be SPY or SPX and also the IWM and the Russell 2000, which same thing. But essentially what we're looking at with the bull and the bear is we're trying to define what is the bull argument for a stock, or in this case an index, and what is the bear argument. And we're going to look at both sides of that so you can understand where the risk really should be for you personally and what would be the best decision for you moving forward. So right now we're going to focus on SPY, and then we're going to get into the IWM and kind of like relate the two and kind of see where there could be potential relation on if there is any synchronicity or not between these two indexes in the near term. Now right now, if we're looking at the SPY, we're sitting right around the 600 level. We're just above 600. And all these lines you see on my chart, these are all basically support and resistance levels. I call them LOIs, or we call them LOIs, or community over exclusive trading. And essentially they're levels of interest where you should see volume react, where you should see some sort of interaction. When there's a space like this, a good gap, that typically means there isn't much volume there isn't much interest. Now, there obviously are going to be levels in here that are important, but at least for what I look for on the daily, there's not much in this area, specifically on the SPY, that really interests me too much. You may have a different viewpoint, totally fine. But for me right now, being north of 592.65 and south of 601.92, and obviously the 600 level, which I don't need to put a line on the chart for, is an area in which there's a lot of flux, where there isn't necessarily a lot of confidence either which way, especially if we don't see volume come through the tape. And we've actually seen volume been kind of dipping ever since basically 6.6 last Friday. You look down here at my VMA, so that's your volume moving average. We had a nice little pop on day prior on 6.5, and then the VMA came down 68 million. Yesterday was 66 million, and today's obviously not done yet, but we're starting to see a little bit of a volume decline, which is a little concerning, especially with how these daily candles look. They're not very promising, and the fact that we're heading into this obvious psychological resistance at 600, and the fact that I have another area up here at 601.92. So here's your bull and the bear. Bull case. What I would like to see at this point, where you actually have a decent RSI, and as I personally use RSI, it is a bull or bear momentum. It shows me where the momentum is in the market. It doesn't show me overbought or oversold. And my line in the sand is 54. It's that simple. If it's above 54, it's maintaining bull momentum. If it's below 54, it's not necessarily bearish, but it's depending on how low it is, bearish momentum or neutral momentum, or there's no momentum at all, obviously. And right now we're at 65, 66 area on your RSI on the daily, which is indicative of bullish momentum. Good to see. However, as I just alluded to, volume's a little bit lower. So if we do see volume kick up, we do have a few things working in our favor here as a bull, where we have the momentum on our side. Your MACD is actually starting to curl back over, so it's showing that there could be, on the daily at least, there was a level of a cool down, which if you've been watching the program, we saw this area of consolidation here for about a week or two before getting this low volume breakout. So getting that little area of consolidation there allowed things to cool off before we could potentially get this MACD flip to push to the upside. And also knowing that the 601.92 level here is a resistance. However, if we can break that level with increased volume, you actually are set up here pretty good on the daily for a technical breakout to break into this area in which there is more volume, so there should be more price interaction, right? There should be more price discovery. Bulls should start to push this even higher. Not to mention, we're not too far from all-time highs here. Believe it or not, we're only about 11 bucks off of all-time highs here. I know it doesn't feel like it for some reason, but we are pretty darn close. Going back to looking at the weekly here, we actually had a pretty hard fall, obviously due to the tariffs, moving back to the upside, kind of like a V bottom on the weekly. And your weekly here, you're kind of set up as a kind of really disgusting cup and handle, a very narrow narrow cup and a tiny little handle here on these two little candles here breaking to the upside. Again, very minimal. It's if you shrunk down the photo of what a a cup and handle could look like, but that's kind of what this price action looks like to me, where we had a sharp decline, we came back up, creating like kind of a slope, so to speak, a parabolic nature there, cooling off as we talked about with the daily chart before a rally. So letting that bull move cool off before getting another leg up, which is really what you want to see as a bull. The other thing I want to highlight is that monthly SAR. So that stop and reverse indicator, your SAR indicator, on the month is at 607.74. So breaking that level, 607.74, could be massive. If you go back in time and you look at your chart here, this is the monthly chart on SPY. Every single time it's broken, that monthly red SAR has a minimum rally from peak to valley, so from that break to the top, minimum rally of at least 70 points. That's throughout time. So even if we go all the way back here, and you pick up a red SAR break there, down here, wherever, this is really tiny, but you pick up a red SAR break down here, and even when the SPY was trading at 80 bucks, you got all the way up to right around here. Okay, in that case, it's 30 bucks, so I went too far back, but let's go back somewhat reasonable. Let's go to, all right, 2011. We broke the red SAR here. We were trading at 103. That was a pretty decent rally, got all the way up to 181, 70 points. Broke it to here on 1030, trading at roughly 178. Rally, got all the way up to 265. So you get my drift. Go back and check me. So from 2011 on, we got at least a 70-point rally, and obviously as the price of SPY appreciates, even a 70-point rally is fantastic. So we're not even looking at percentage. I'm just looking at dollar amount. So obviously, as the price of SPY appreciates, that percentage rally, theoretically, if it kept at 70, would be smaller, but it still leads to some strong bullish potential momentum, which is what we want to see. Now, going to the bear side of things. So if we're looking at the bear case for SPY, let's get back to where we were. And I already talked about this, but we'll bring it up again, looking at the volume of SPY. It's something very concerning, the volume in these daily candles. These are not really super strong daily candles. This is not indicative of like what I personally want to look for a strong breakout with momentum to the upside. Especially these last two doji-esque daily candles are indicative of indecision. It's showing that there isn't a clear motive on which way the market wants to go. You swept the highs, you swept the lows. You swept the highs, you swept the lows. Both days in a row, really. Today, so far, we have an okay daily candle. We just broke 601. It looks like we're trying to push to the upside. But for these 3 days here, or 2 days here, not too great. Now, if today, especially if we close for a daily candle or even a hanging man candle, some sort of candle showing bears could be stepping in, I actually might turn short-term bearish. I say short-term bearish because getting a push down to 596 is very likely, and getting a flush all the way to 592.65 just as likely, at least in my opinion, short term. Now, a little bit longer term, if you're more of looking for the bear case, you want to see that momentum start to shift on the daily, getting near that 54 area, but that wouldn't happen until we get back in here. And in this area where we already consolidated is a decent support range for SPY. So near term, I think bears could have a trade here. Like I mentioned before, that's obviously the 600 area and the 601.92 if it doesn't break, especially if volume is lacking. Short-term bears could have an advantage here. Now, longer-term bears, what you're going to have to look for here is basically getting south of 586.12-ish. It's going to put you under the POC for this defined range. It's going to put you at the bottom of this chop, under the middle of this chop range. And depending on how volume looks at that point in time, if you do get a crack of this 581 and ultimately 576.70, you have this obvious gap to fill, but there in this area, there's not a lot of room to catch you. So if we do break these few decently strong supports, albeit getting into 550s or even down to, I would say 550s, mid 550s would be very realistic. Now, I will say, as I said at the beginning of the program, if you're watching this live, I'm leaning more 75-25, meaning I'm 75% more bullish and 25% bearish. I think bears could have a short-term trade here, but longer-term risk-reward doesn't really favor the bears here. You'd have to see a few key levels crack and go before you could be more like longer-term bearish. But there is a trade set up here for short-term bears. Now, that was the bull and the bear for SPY. Let's flip it on over to IWM. IWM is a little bit more interesting. So if you watch the Atomcash Angle, the program, we talk a lot about how I like to use IWM as a sentiment driver. Kind of gives me an idea on retail. I know it sounds a little silly, but these are your small and your mid caps, and it gives you an idea of how money's rotating. Is money coming out of bigger names and going into more growth names, more risk on, right? When we see more money go into the Russell, in general, it's showing that there is more of a proponent of the market taking more risk on. They're willing to take more chance, because you got to think that a lot of these smaller companies, they are growth companies. They may or may not make money. They are story stocks. So there is a case there where some of these smaller to mid-cap size companies aren't necessarily profitable. Other thing you want to keep in mind that a lot of people don't talk about the Russell, and probably why you shouldn't invest long term in the Russell, all the good companies from the Russell go to the S&P 500 because they get big enough, they get too big, and they're no longer valid to be in the Russell, right? And they make enough money that they're no longer valid to be in the Russell. They get, their market cap grows so large that they get taken out of the Russell and something else gets thrown into the Russell. So all the good companies are eventually rotated out of the Russell and put into the SPY, essentially, right? So that's why you never, at least in my opinion, want to hold IWM or the Russell like long term, unless your goal is more of like a trading instrument, or for me, either a trading instrument or a sentiment driver. Unless your goal is to get some mid-term growth exposure. Again, looking like risk on. So with that little blurb out of the way, let's take a peek here on the daily chart on IWM. Now, a little bit different than SPY. You're actually showing a little bit stronger momentum, as we just talked about how I use RSI, and your MACD is already flipping to the upside here. So actually looking like you could have a bull break here. Now, you should also notice basically gapped up the last 3 days in a row. Today also we gapped up. So we're seeing jumps in, like again, risk on activity the last 3 days, which is great if you're a bull in the market, because it's showing that people are willing to take that extra risk, to sound redundant, but it is. They're willing to take extra risk in the market right now to try to push the envelope and make a little bit more money with growth names, right? Or again, these story stocks that don't necessarily make money yet. Now this one's a little bit more interesting. If you're a bull, you're going to have a hard time here near term, but that's not a bad thing. And let me explain. Bulls, you're going to have to get through this dark blue line on my chart here. That's a 200 MA. That is at 215.18, which is in eyeshot today. Tapping that today is more than likely where you'll see some area of resistance. But getting over that, which again wouldn't be easy, but getting a hard break there with volume could lead to a momentum shift, a stronger momentum shift than we're already seeing in IWM. Now, again, to be said, that is an area of decent resistance. It will be, and it will act as a pretty hard line resistance, but breaking that leads you into the golden pocket here. In the golden pocket, this is for a fib retracement from the all-time highs to that tariff low. And that golden pocket number, or that pocket, is 216.21 through 218.52. Another area in which could be treated as resistance. So, if anything, unless volume comes in near term, this is actually leaning more bearish. Now, with that being said, the way the whole market's sitting, and the way sectors are sitting, the way I'm looking at things, the way volatility's sitting, I'm actually more on the side that we're actually going to break through this and power through this. However, I think what we would see, or what is the more likely case, is to break up and get a wick and consolidate in this range above the 200 MA, but within the golden pocket here, before getting a continuation rally to this 223.32 area. Now, with that being said, that will be what we're looking out for as a bull. As a bear, I kind of just already talked about it, but you've got these areas on which you could get a decent rejection as a bear. Now, if we do get those rejections, what are you looking for? Well, we have a few decent areas of support and resistance just below here, but we also, to be fair, have technically 3 gaps: to the daily gap on today, yesterday's gap, and the gap prior, which is going to lead you down about 5 points on the IWM, or roughly, what is that, 2%, 3%? Downside here on the IWM, and getting back into a similar consolidation range that we saw in SPY. So these two are moving very similarly today, or in general recently. However, I would say IWM is moving more aggressively to the upside, especially that we're seeing these gap ups continue on the Russell. So your bear case here is getting a rejection again to the 200 MA or in this golden pocket, where bears could look for an opportunity. Now, Longer term bear, so that's your little short term bear thesis, because I feel like a long term bear and a short term bear are two very different people. If I'm a day trader, I could trade short and not be bearish long term, but if I'm more of a long term bear, I want more of a succinct idea of what to look for longer term. The long term bear, you're going to want to kind of hover in this range here of getting above this, getting around this 211.28 area and this 213.97 area. Kind of sitting there for a little bit before firing to the downside. On the weekly chart, this is also sitting at the 50 MA. So you have a weekly resistance and a daily resistance with the 200 MA on the daily and the 50 MA on the weekly. So you do have an area that this is going to be a strong resistance to, but again, getting over it could be very positive for the bulls. But as a bear here, you're going to want to stay sub this 50 MA on the weekly and really not go too much further here. On the monthly, you don't want any more momentum coming out of this monthly chart. You really don't want to close above this monthly high from 331, that 215.48, which we're in earshot of here. As a longer term bear, you do not want to have this monthly candle close over that level. Now, there's plenty of time left in the month, and this weekly, like I said, you're sitting right on that 50 MA. I'm sitting in the camp, again, more 75-25 bull than bear, but it would be disingenuous to name the segment the bull and bear and not give you the bear part of the segment or the bear risk here, either which way. So I do believe for both SPY and IWM that there is a bear opportunity short term, but longer term, things are leaning more bullish than bearish. So guys, that was the bull and the bear for SPY and the IWM. Hope you found this video helpful, and don't forget to like and subscribe. Cool, I recorded that for you guys. If you want it later, I saw the alert fire off on IWM, so let's pop over there real quick. 142, there we go. Oh, cool. I already trimmed. I had my limit order fill. That was a 22% gain. So if you haven't already, could trim those contracts. We hit my price target. I said 141 was what I was looking for. So we trimmed out on those. Fantastic trade. Fantastic. Broke the highs like I said we would, like I was thinking we would. Got a little bit momentum there on the 5 minute. Watch this 5 minute flip here. We could get a little bit of a rally here. These are almost in the money as well, so that gives us a completely different risk profile once these move in the money. Love to see it. Watch this move to 215, and then again, that level you want to watch on the daily that we just talked about, obviously, 215.18. So that is a pretty important level to watch on the daily, or on intraday, I should say, especially as a day trader. If you are trading a smaller account, you could, of course, move your stop up on IWM here. You're probably pretty safe at 128. Here, I'll lead by example. I'll move my stop up. Moving stop loss up to... Actually, I'll make it 127. Might back test the old high here, which we're sitting just shy above, or the AEMA before getting another leg here, but we'll keep an eye on this. But good trade. Worked out just how we thought it would, essentially. I'm happy we squeezed the segment into there at the same time, came back, and the trade was done. Gotta love it. Killed two birds with one stone. That is my favorite. How about I highlight, would you guys like this? I haven't seen a single, I've got 120 viewers right now. I haven't seen a single person type in the chat at all today. So, two things. One, would you guys like it if I highlighted one stock that I'm bullish on that I don't think I've mentioned on this program yet for your consideration? Put a 1 in the chat if you'd like that. Put a 2 in the chat if you wouldn't like that. And if you're typing a 1 or a 2 right now, do me a favor. I'm going to hit the cheap plug one more time. If you haven't already, drop a like on the stream, drop a comment, like, share, subscribe, all that fun jazz. Again, it helps me out very greatly. If you're enjoying the stream, if you want to continue enjoying these streams, I have a goal that I've set now. Once I hit 500 subscribers over on the YouTube channel, I will do these daily. So, if you haven't subscribed, and if you don't have a YouTube account, just make an account and subscribe. Once we hit 500 subscribers on YouTube, I will do these daily. So if you like the show, you want these to come daily, then that's the goal. 500 subscribers on YouTube, tell your friends, etc. And that's the new goal. So let's hit it together. We got a 1 from Martin. I've been trading hard to type. I know some of you are at work. You're listening in the background, so I'm not trying to to force you to do anything, but I love interacting with you guys. I want to hear your thoughts and opinions. So I will highlight a name that is, here, let me pick one. I've got a few names that I like that are under the radar. Having fun with IWM right now? Hell yeah, brother. That's what I like to hear. I'm having fun too. So the trade plan here, before I get into the stock that I want to highlight, watch the high at daybreak here. Again, 215, was it 16? I keep forgetting the number. 215.18, that's the number. In fact, I will just put a line on my shirt. That's where I'm probably going to go runner size unless we break it with some volume, like nice and quick. Nice, look at this volume here in IWM. Second highest volume of the day at all-time highs. If you're a bull, that's the kind of thing you want to look for. You want to see high volume pushing at the highs. You don't want to see a big wick there, but the fact that we basically closed at the highs on high volume is indicative of a trend continuation here, potentially. So we want to see the next one or two candles ideally get over that high and make a new high. And at that point, I'd be anticipating some level of a pop to get around this 215 level where I'd finally take, like, I'd go runner size and leave the rest for the rest of the day, essentially. Not to mention those contracts would be in the money. Let's see how much that delta appreciated. Wow. So that delta, I think, was a 36. That delta is now up to 48. So that's just showing you the power of moving in the money with these contracts. Big 12-cent delta appreciation there, which obviously is going to happen as you move into the money, but it's nice to see that delta appreciate as we push to the upside here. Okay, let me pick a name out of a hat here that I'm long on. So I'm currently long about, without counting, I'd probably say like 30, 40 names. But I like picking the ones that are, that people really don't know. So let's pick one of those out. What do you guys think? I think that's a fun idea. Let's pick out... Actually, I have it right here on my watch list here. All right, wait. Let's hit the trade first, and then we'll circle to that. This is exactly what I was talking about here. I wanted to see, kind of sit here for a minute or two, then get a new break of a high here, which we're getting right now. I actually might go, yeah, I think I'm gonna go runners here early, just because we're getting near that resistance, and I don't want to be, I don't want to be too greedy here. Yeah, and this is typically where I like to go runner size anyway. So I got about 30% here, so I'm gonna go runners here. Or I'm going to start to trim out runners. Runners. So essentially what I like to do here, when I go runners, I don't typically just sell a big chunk. I'll, in my mind, know that I'm going to runners. So, for example, in this case, I sold some at 150. As we sit here, I'll continue to sell 149, 148. If we get another pop, I'll sell 155. You know, whatever. If we get moved down, then I'll sell a little bit more aggressively because I'm already at like my runner size, but I know there's potential to get a little bit more of a pop here. But typically when I consider something runners, I've fully realized the trade for the most part, I should say the meat of the trade. And what I like to look for as the meat of the trade tends to be the measured move that I'm looking for, which in this case was 215.18, which haven't gotten yet. But I also know that I'm not dumb, and I'll highlight this in a second. I like to look for the meat of the trade, so when I get realistically to my goal, that or 30%, especially on a day trade, is where I like to de-risk very hard. Stacking 30% gains is fantastic, so focus on your compounding, on your compounding games. Hey, Beastwood, thanks for watching, brother. Thanks for dropping an LO in the chat. So yeah, this is something I want to highlight real quick, where I just said I'm not dumb. When you're looking to trade, when you're looking at a chart specifically, how many people have the 200 MA on their chart? How many institutions have the 200 MA? How many retail traders? How many people have the 200 MA on the chart? Probably a lot of people. It's a very common moving average for technical traders. How many people are aware that the 200 MA on the daily is 215.18 on the IWM? Probably a good amount of people. Swing traders are probably aware. Day traders are probably aware. People who are like actively trading, probably aware of that. I like to take profit, if I'm in the space to do so, before then. So again, we might get a little push here, which would be great. And I'm happy I went runners here at 214.97. but now we're in the money, so I might trim again here in a minute. But as we get closer to this level, some people wait for the level to tap exactly, and when you wait for it to tap, you might get left behind. You might see, like, well, if this leaves a big wick here, that'll be a sign that a lot of people have liquidated positions, they're out. But if this pushes here and closes, especially with a Marubozu candle, which I love saying, which is basically a candle, no wicks, that is a very strong bull indicator. But you always want to be able to trim into strength and not be the one left holding the bag, especially if you're day trading contracts. With that being said, I'm trimming out some runners here. As you're watching live, that's about 40%, 39%. Nice and easy. There we go. Boom. 215.18 wicked above it. So now my trade is fully realized. Now I'm just going to let this ride, especially since I'm in the money. I'll see what happens here. If we consolidate up here and push, fantastic. If we don't, there's a strong possibility we push down. Where I already have the stop on, what did I say, 128 and 127, which price would have to be sub 214.64, which is where I'd look to close anyway. So I'm saying this now because if you're watching the show now, you may, by the time I end the stream, this might still be an active trade. My cut point for this trade would be around this 214.64. That's where I'd look to get out, regardless of what price is. So there's a little tidbit for you. If we hold and break this 215.18 area, whoa, Nelly, we're getting into the gold pocket. I'm going to get another $1.20 on these contracts, roughly. Or, sorry, $1.20 in the underlying. That would make it about 52, assuming no delta appreciation, about 60 cents on these contracts. That would make it 222, which means roughly a 92% gain, assuming no delta appreciation. So if we see, there's definitely a good place to have runners. This is what runners are for. If you can't afford runners, taking full profit here is very smart, just as smart, or moving up and having a very tight stop loss. I tell people who have very small accounts, if they're trading, if you don't have the ability to put runners on, maybe you move, right now we're trading 165, maybe you move your stop loss to 150, where yes, you are losing or risking to lose $15 of profit here, but there is stark upside, especially with this Marubozu candle here at 10.11 and now making a new high here. And then you can just move up a trailing stop as you go. So it's something to consider. Anyway, the stock I want to highlight to you guys is purely from a technical basis. And this is one you probably haven't heard of. It's actually on my watch list over here on the side. It's already here. And it's ZGN. Now, this is, again, this is more of a technical trade. So this is a company that's an Italian-based manufacturer of menswear and accessories. So they produce high, what do I want to say? High-class apparel, expensive apparel, right? I'll be dead honest with you. I don't know too much about this company. I looked into them. They make fancy Italian, apparel. Great. What I like about this company is the chart. Now, obviously, as I've said, I am long this company already. So this is a company I'm already long. But if you look at the daily chart here, I really, really, really love this daily chart. So you basically have a combination of an inverse head and shoulders here. So you actually have a localized inverse head and shoulders down here from 3/7/25 to 5/2/2025. So you have a localized little head and shoulders there, inverse head and shoulders. And then on the larger time frame, so we're still on the daily chart, you kind of have another, it's not a clean head and shoulders or inverse head and shoulders, but you have another little inverse head and shoulder here on obviously what you're looking at the bigger picture here. But what I like more than that as well, it's another shape. These are the only two shapes I like. If you know something about me, I hate when people draw shapes on the chart. I think it develops bias. I think you're like, oh, that's a rising wedge, a downward wedge, a bullish flag, a bearish flag. But there are two shapes I like because they kind of work with the SAR indicator. They work on the parabolic nature of stocks. And that's a head and shoulders, and that's a cup and handle. And this company also basically has kind of like a cup and handle where you're seeing here going from 226, a big swoop down, and arguably a handle forming here on the side. Above this dark blue line is my 200 MA. So we've respected the 200 MA in this time as well. Plus, if you want to get into another head and shoulder shape, you have another little inverse head and shoulder here too. shoulder, head, shoulder. So on the daily chart, you've got patterns and patterns and patterns. It is patternception for this company, ZGN. And on top of that, top of all of this, you've got the red SAR on the daily here, just shy of its current price. 879 is the daily red SAR on ZGN. With a red MACD that could flip over green, especially on that SAR break, with a 64 RSI on the daily. So if you've listened to me, if you even watched the program today, and it's your first time watching, you know that what I just outlisted here are like ultra bullish things I look for in a swing trade. Now, full exposure, I only have equity. I don't have options on this company. Actually, I don't even know if they do. Okay, there are options. I'm assuming the liquidity is mega thin. Yep. Let's look at the daily. Well, how many contracts? Two? 4 contracts traded on the June 7.5 calls. So I would heavily suggest not touching contracts for this company just because the liquidity is so poor. But equity on a name like this with this kind of setup, with a tight stop, you could risk 832. Maybe if you want to go a little bit lower. I think I have my stop down here at 794 where I'm allowing a little bit more room. So that's actually a decent stop. I'll probably tighten that up now that I'm thinking about it. Because I got in somewhere around back here. But you could have a pretty decent stop on this. And you're looking at easily $1 here. Back to this localized high. Getting over that pushes us up to the 11s and even the 12s. Which may not sound like a lot because we're saying small numbers. I'm not saying $200 a share because I'm not insane. But basically from its current stock price, what is that? 30% gain on equity, getting to 1130, and you're risking maybe here. Actually, I have my risk to reward right here. 4-to-1 risk to reward ratio, assuming a stop down here at 773, and assuming a take profit at 1134. Now, if you want to tighten up that stop and go up to, what is this? 794. So here, let's play a game. Let's tighten that stop up just a little bit. Let's go 794. That's the next area of support beneath this range here. That turns your risk to reward to a 5-to-1 risk to reward. So for every $1 you risk, you gain to make 5. That's a fantastic risk to reward, especially on an equity name and an equity trade. This kind of setup, I know a lot of people use the term A+ setup, but this is the kind of setup I get really excited about because these are companies that fly under the radar. Not a lot of people know of them, especially with it not being an American company. If companies like this gain hype, they gain traction, they gain volume, and you're already in before the party starts, so to speak, they take off. Now, with that being said, with this segment that this company operates in, I don't anticipate retail to get behind this name and to get a big short squeeze or anything stupid like that. But I do anticipate a strong technical move to the upside, especially if we get over the 50 MA here on the weekly, which is basically the only other resistance here, 873, which is where we're at literally right now. We're on the weekly resistance. Getting north of that, getting north of this, sorry, I got to zoom in, 881. Getting north of 881 here. This thing is one of those names you can just hold and just keep tightening the stop on as it rises, at least in my opinion. The other thing I really like about this name is it also has a monthly red SAR, which we talked about. POC is right around this 950, 960 area, so it should come back up and tap there, break that red SAR, and push to the upside if you're patient. Wouldn't shock me when I was doing my numbers before. I was like, fair value for the company typically is what I'm looking for here, and that's around that 1130-ish area. 1130, $12 is kind of where I'm seeing like fair value for this trade. So good, again, risk to reward here if you're patient. The other thing you want to be very conscientious of, specifically with this name, is it's kind of akin or kind of a play on tariffs, because this is an Italian company and they produce textiles. So I would argue this is a very tariff sensitive company due to the fact that whatever trade agreements are going on with the whole world obviously are going to affect the supply chain. So I also like this trade because I do believe that tariff tensions are starting to cool or will continue to cool. As a result, that is a bull catalyst waiting to happen for a company like this, where indirectly it's seen as bullish. It's not directly bullish for this company, but because the environment around it's supporting, it may help lower the cost of goods for them to produce their product, or just make trade easier for them, which in return will be a bullish catalyst for a name like ZGN. So that is the here, a random little hidden gem that I can share with you guys. Again, a good risk to reward ratio on this one, about 5-to-1 risk to reward, assuming an entry. Well, actually, I should say that's assuming my entry, which is about 30 cents lower. So you might be like 4-to-1 risk to reward if you entered today. But assuming around a 794 stop, 1130 take profit, like total, again, trade realized point. Really solid risk to reward. Love the chart. Definitely for your consideration, in my opinion. A name no one really knows about. Those are kind of the names I like investing in sometimes, and kind of waiting to see how they do. All right, guys, that's probably going to wrap it up for the day. Let me just double check something right here. Let's just make sure we didn't get any new news catalysts added to the market. That way I don't leave you guys with any potential surprises, because I'd like to give you guys, as I like to call them, the landmines, what you want to keep an eye on so you don't step on one. Again, the only thing you really want to look out for really is going to be the 1 o'clock 3-year note. That minorly may affect the market, and Trump speaking at market close at Fort Bragg, probably not going to affect the market. And we'll highlight tomorrow real quick because I will not be here tomorrow. The big one tomorrow, obviously, is CPI, so you want to be very mindful of that. That is pre-market at 8:30. Outside of that, you have the 10-year note at 1 o'clock tomorrow. So CPI is going to be the big one, but past that, pretty quiet, all quiet on the Eastern Front, and obviously I'll be here on Thursday to help you through that. But with CPI specifically, so depending on SPY closes, you may want to be more defensive, de-risk. If SPY, here, let's leave you with this. If we see a low volume move on SPY today, meaning volume is lower than yesterday, so volume moving, we'll look at volume moving average. Let's just look at overall volume. That way we don't look at trend. So 2 days ago, 66 million. Yesterday, 53 million. If we're closing under 53 million in volume today, and it is a green candle, specifically if we tap 601.92 and reject it, and CPI is, and I like to say received as bearish, because sometimes some numbers may be seen as bullish and some people, the market sells off, whatever, people freak out. So I like to say if it's perceived as bearish, you may see a hard move, again, short term on the SPY to the downside. Conversely, if we see some volume come in at the end of the day, specifically at the end of the day, if we see volume come in and we're over that 601.92, in fact, if we break 601.92 into the close on higher volume, and CPI is bullish, then we could see the start of an actual next bull leg here. So you guys got the bull and the bear earlier, but specifically with CPI being tomorrow morning, that's going to be a big catalyst for the market. So having that in the back of your head and having these price points also in the back of your head should help kind of steer your decision making into the end of the day. That way you know if today, or into the end of the day I should say, is something you want to do for your portfolio that's more risk on or more risk off. So that being said, guys, I will leave you all to your devices for the rest of the day. Make sure you are smart and you make smart decisions. I've got 170 people watching right now. Thank you guys all for coming by and for your support, whether you like, subscribe, follow me, whatever you're doing. I appreciate greatly. Some say you'll need an extra trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, and remember, precision beats prediction every damn time. I'll see you on Thursday at 9:15 a.m.
Time has passed, and that's a wrap. You're on